Let's get this thing to roll over and then we'll switch pages, get everybody here on YouTube. Send this broadcast over and share my screen. Here we go. All right, where we stop, nobody knows. Here's that. Here's that. Okay. And we are live. Here we go. All right. Let's get this thing going. Let's share my screen. Jim, Brian, good morning. Okay, we're now sharing my screen. Let's give the room a few minutes to fill up. We got Ben, we got Tenright, Henry, good morning, Henry. Roddy, good morning. Timothy, good morning. Flying Ronan. Dave Brentley, good morning, good morning, good morning. Good morning. Jody, good morning. I'll be starting in just a minute. I just want to give the room a minute to fill up. It is freezing here in Florida. I don't know about you guys, but it is freezing. So just FYI, I have a very cool webinar with Jack Carter on Wednesday, and I have a VIP room at noon as usual. I'm going to post the links right here for you guys. All right. Wow, we got 50 people here in less than 2 minutes. This is good. I like what I'm seeing. And Jack is here. I'll talk about what's hot right now, Jack. So, as you guys know, I don't miss a beat. And if you guys have any questions of something that I did not bring up, please let me know. Yes, Dr. Serena, hello and welcome. And yeah, Capital One and Discover Financial. Wayne is here as well. All right, let's begin. So starting off with the broad market, let's just get into it. No need to wait or waste time. So as you guys can see here today, the market is lower. The NASDAQ is down by about 70 points. That's about equivalent to the Dow being down about 200 points. Obviously not random. And now that Moondog is in the house, we could definitely start. The Dow's down about 113 points. The NASDAQ is causing most of the trouble. The troublemaker here is definitely NASDAQ. And if you guys tell me you weren't prepared for this or you weren't expecting this or you didn't think the market was going to do this, well, all I ask you to do is just rewind any of my videos from last week, and most of that information is in there. I wasn't expecting a very bullish run. So the NASDAQ and the S&P are down. As far as earnings are concerned, this is going to be the last week of major blue chip earnings, and then the mid caps start up. So as you guys can see here, first of all, before I start getting too deep into this, today is Tuesday. It's not Monday. And typically whenever we have a short week, regardless if it's a Monday or a Friday off, a lot of folks don't come into the week till later on. A lot of it use it as I know a lot of folks in our office had a 4-day weekend. So, and are just coming in tomorrow. So the point of the matter is that be careful with the market. It may start out really slow and gear up as the week continues. Usually the first day after a holiday is fragmented and choppy. Although I'm seeing a lot more downside today. Usually that works more to the upside. So you got Walmart today. You've got Home Depot. You've got O today. You've got Pan W. You've got a lot of stuff. You've got technology and you've got consumer discretionary, consumer staples, depending on where you want to put Home Depot and Walmart. Tomorrow, you've got NVDA. That is going to be a big player. We're going to talk about NVIDIA in just a few minutes and how that'll impact the market. And on Thursday, you've got Vail, you've got Square, you've got Melly, you've got Moderna, you've got Walgreens. So we still have a fairly packed week of earnings, and we got to respect and pay attention to all of this. As far as Fed data, we're starting off pretty slow today because the market's not, today's not going to be a very big catalyst. But tomorrow we've got FOMC minutes. Now, this is going to be very interesting because I would say FOMC minutes is a major announcement. But honestly, after how, and again, I'm not trying to get on Squirrely Powell's good side. I'm just being straight up. They were so transparent last time. I heavily doubt this report is going to have a major announcement or it's going to tell us anything that we did not already know. Now, This report a month and a half ago would be very, very different. People would be going, what? What? No lower interest rates for a while? Well, yeah. But I think that's already, I think it's a given. I think they've been as clear as humanly possible. And I believe the market is finally appraising that. And I'll talk about that when we talk about bonds more. But we've got, I think this is going to be a nothing burger. I think this is going to be just a lot of volatility that goes absolutely nowhere. Then you've got jobless claims. You've got. Let me just undo this. Whoops, what did I just do? You've got existing home sales, jobless claims, but all in all, aside from Fed speakers already telling us what we know, nothing is going to happen in the near term, and it already is priced into the market. I'm really not seeing anything major this week instead of earnings. So I think the markets are going to get a chance to trade on their own volition the majority of this week, which is actually exciting. As far as the bond market, let's look at the bond market real quick. Good morning, Rich. Good morning. I'm going to just say good morning to everybody here. And again, just so you know, here are links. Jack Carter is doing a webinar on Wednesday. I'm going to be joining him. And VIP room at noon today. You don't want to miss out. All right, so bond market. Let's talk bond market. I was very critical of the bond market last week. And I told you that I don't believe bonds should be up here when they took this up here. I said they should be down here. And I also said that if they keep coming down to this level, eventually they're going to break lower. And this is the 100-day moving average. And we're already between the 200 and the 100. So I don't think bonds are going higher. I think bonds are going lower. I think there's only so many times we're going to knock at this level before we break it down. One knock, two knock, three knocks. There's a lot of knocks here. So the point of the matter is, I think we're going to see some more downside in the bond market. I'm not seeing anything in the bond market that would cause the stock market to rally right now. Not at all. Also, while we're here, let's look at the energies market. I know a lot of folks trade crude oil. And I was talking about crude oil last week, and a lot of folks were asking me if it was going to break out or not. Mustafa said, how is rate cut estimated up priced into the market when we have gone up 5% after 7 cut, now 4 cuts? Rate cut is estimated 8% right now, Mustafa. It's not at 60. Take it easy. It's gone down, and I'll talk about that in a bit. The rate cut prognosis next month is at 8%. It went from 60% to 8%. So remember, we were talking about this line, this red line, and I said if it goes above here, nicely, really goes above here, it'll break out. It's not happening today. The market huffed and puffed, and remember I said more likely than not, we're going to stay within this channel. Well, I think we're going to break down and come right back into this channel and cool off a bit. I don't think there's much upside because there's no major catalyst for the energy market. There's no international news. There's no global news that would impact it. And I think unless stocks really take a big dump, and I don't see a big dump this week, I think we're going to cool off here, and energies are going to come right back into their range. That's my opinion. So I'm not really bullish on energies. I'm not really bullish on the bond market. As far as earnings, I kind of gave you the broad strokes. I think it's going to be company by company. Let's talk a little bit about the stock market, the technicals, and then I'll talk about fundamentals. So I would start taking notes here, guys. This is important. So the stock market, let me move this line here. The stock market huffed and puffed. It's still above the 8-day EMA, but you could see here, and this is what I was saying the other week. I was saying how there's a really good chance we're going to come up here, not take out the high, test this area, and come back down. Well, let's look at it on a 5-day basis. So it couldn't break that area, the high. It did go above that gap level. So it did shake in, it did bring in the weak hands. So we did go above that level. We brought in a bunch of traders, but here is the previous high. We tried doing it, and now we're back in that area, the CPI area, where the Fed said we're not going to be lowering rates anytime soon, okay? So we're back into that area. If you look at the QQQ, which looks a little more interesting, you will see that we never really made it all the way up to this area. We barely made it here. And as soon as we gapped up, what happened Friday, guys? What happened Friday? We gapped up at the open, and what happened Friday all day with the QQQ? Down, down all day. So if you look at the daily on the QQQ, you will see we're actually below the 8-day EMA. And this is exactly what if you don't believe me, look at the tape. I said, when we were right here, I said, guys, the most likely scenario is not us going up and taking out the high. The most likely scenario is us testing this area and bouncing off. And I went here and I showed you the intraday chart last week, and I showed you this picture here, and I said I thought we were just going to come up right here, but we actually went up a little higher, and then we just gapped straight lower. Do you remember, Adam and everybody else, I was showing you this 30-minute graph last week, and I was showing you the Dow, and I was showing you the QQQ, and I was showing you the SPY using 30-minute charts? Morning, Adam. And I was showing you how the odds are not that we're going to go higher and take this out. The odds are we're going to test this level and start coming down. And that's exactly what we are doing right now. We're testing that level and coming down. We're back at this level. So the key now is going to be, are we going to be able to take out this high, or is this going to be just a test of this level, which brings us down? Remember something. The markets don't just go like this. The markets do this. They bounce, they test. So they went up. Now they're testing this area. If we can't hold this area, and if we go below the 8-day EMA on the Dow, we're going to be right back here at this level, which was the CPI level. Yeah, I talked about it hard. I showed you guys this chart right here, the 30-minute chart, and I showed you how we made a swing high. And my concern was, I said, we're going to fill this area right here, the gap, but are we going to go higher or not? And we went just a hair. Look at that, just a hair. And then we just broke down. The QQQ actually shows it the best, because the QQQ started lagging last week. And this is really important. So the question, see that? We tried, we gapped, we were right closed right here. We gapped and then went straight down. So basically what the market is telling me, especially on the tech side, that it's rejecting this area right here pretty hard. Look, it had one day, 2 days, 3 days to break above and test this high, and it couldn't. All last week. So where are we now? We're now below day 8-day EMA. And if you look, we're almost at the CPI level. This is when the Fed announced right here that interest rates are not going to be lower anytime soon. We're almost at that level. And I got news for you. Look at the bond market. We're almost right at that level right there. So there's no miracles out there, folks. And it takes the market a few days to get going, but those news are not going to change. And the market is not as bullish as it was. There's a lot more shorts on the table than there was a week ago. Looking at market sentiment, and I'll look at it real quick here. Look, only 55% of stocks priced over $2 are trading above the 50-day moving average. Okay. On the S&P 500, you got 59% and 70%, not 90, not 95, not 80, 59%. And on the QQQ, on the Russell 2000, it's 52%. It's like 50%. And on the NASDAQ, it's also 59%, which means if you were to look at the market, and if this was a even not market capitalized weighted, okay, but capped in a normal way, what you would see is the market right here, not here, right here. And if the market's trading here, a lot less now listen to what I'm about to say. If the market was right here instead of right here, the sentiment towards the bulls would be a hell of a lot different than it is right now. The difference between being above the 8-day EMA and being slightly above the 50-day EMA, that's a whole different market, folks. A whole different market. So again, I'm just letting you know that we're not nearly, hey, we're near all-time highs. We're near all-time highs. We had several days here to go back up here, and we couldn't do it. And the Fed data and the earnings data is not getting any better. It's mediocre at best. All right, so let's now talk about fundamentals, sectors, and then I'll give you guys the top stocks. So Federal Reserve's latest policy meeting, as well as earnings for semiconductor, NVDA are up this week. That's right, NVDA. Tomorrow. It's expecting 11% range. That's how much is the stock price right now? Like $600, $700? That's a $60, $70 move on NVIDIA. Can you imagine? That would be crazy. That would really, really be nuts. We had core PPI. It came out better than expected, which gives the Fed absolutely no reason to lower rates. We saw home sales, housing starts, not existing home sales, housing starts fall and permits fall. Not a really good sign, although expected this time of year. Really, it's February. That's expected. And the consumer sentiment rose to a 2.5-year high, which is weaker than they were expecting. They had pretty good expectations for that. Rich says, do you think Qs will see a drop down to the 410 level? Ask me in a few minutes when I go back to the Qs. So the news Friday was not all that great. All three reports were below estimates. Dolly said, and here's why I think the FOMC that you're going to get this week is going to be absolutely nothing important, because they're giving it to you right here. They're literally telling you right here. But this time it is baked into the market. Here, the Fed should take time before implementing interest rate cuts. That sounds about right. Here, at the same time, she said 3 cuts were reasonably baseline this year. Yeah, that sounds fine. I think it's all going to start happening second half of the year. Bostic said he supports initiating rate cuts at some point this summer. Remember what I said? End of summer would be very useful. More data is needed. A year ago, 6 months ago, I was in the fourth quarter. We've seen tremendous progress. I agree with him. If that continues, I'll be willing to put it forward even further. Barkin stated latest inflation figures highlight why policymakers want to see more data before cutting rates. So they're totally 1,000% being on the level, which is why now we don't have a 68% chance of a rate cut. We only have an 8.5% chance of a rate cut. And don't say this is a surprise to you, because I was laughing about this 4 months ago. Yes, 4 months ago. And how about this? 34% chance of a May cut, which I think is a reasonable number, actually. We got earnings on Home Depot, Pan W, Medtronic, ADI. Ooh, ADI is a big one. Intuit, Booking, a lot of earnings this week, folks, a lot. I just gave you the biggest ones. And here, I'll give it to you here right now. I gave you the earnings and I gave you the implied volatility, and here it is. Yeah, that was my call months ago, Adam. You're right. Months ago, August, September, right. That's exactly what I said, but I didn't say it yesterday or today. I said it 4 months ago. So it's a little more meaningful. Participants are expecting minutes from the Fed, which are just going to regurgitate this. I don't think there's going to be one damn new thing in that report, except just saying, we're going to take a little longer, which is what they've been saying. So I don't think there's going to be any, what? There's something new? No, there's nothing new at all. That's the whole point. Europe is flat, not really doing anything at all, down a little bit because of China. China is finally, they're open after their week-long New Year's holiday. Semiconductors led the charge on Friday. Mortgage rates are down. Nikkei closed slightly lower. They've been having all-time highs for, 34-year highs forever. So things are looking okay over there. We're going to be keeping an eye on Discover Financials, because they're going to be merging with Capital One, which I think is fantastic. I really do. Now, my question is, are they going to keep the company as Discover, or are they going to shift to like a Visa MasterCard format? I'm assuming they're going to keep it as Discover, but what do I know? Because that's a huge credit division. Intel, you've got positive data today. Tesla got downgraded. This is one of the reasons why I stay away from them, because there's always an announcement on them. It's hard to predict what they're going to do, because someone's always talking about Tesla. I wanted to do a put spread on it last week, but I'm glad I didn't. It's down 1% now. Caterpillar's down 2%. It was downgraded. That was a high flyer. And Southwestern is up a hair. All right. As far as sectors, remember last week? Here, let me go back 1 week. Semiconductors, Russell 2000, technology. Remember I showed you how it's been shifting literally every single week? Look, speculative, 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 speculative. These are all speculative assets, February 9th. Let's look today. Energy, basic materials, utilities, Financial. These are not speculative. These are the furthest thing from speculative. Where's all the speculative stuff? Oh, wait. Semiconductors, consumer discretionary, QQQ. Do you see how, remember what I showed you a week ago? How every week it's been flipping? Speculative, defensive, speculative, defensive, speculative. Well, look at it again. You can't make this stuff up if you tried, and you can't do it without a time back machine. Look, February 9th, chips, retail, tech, home builders, Russell, QQQ, midcap. This is right here. All of this, these are all speculative. And look at it today. Defensive, 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 all for defensive. So again, markets are now starting to become defensive again. The problem is we did not make higher highs than this before going defensive for the first time. We were going speculative. NASDAQ makes a higher high. We cool off. Well, guess what? We went speculative a full week without the NASDAQ making a new high for the first time in a while. And now we're below the 8-day EMA and we're not speculative. So we had a rotation. We had a speculative rotation and we couldn't catch a bid. And now we're back into the non-speculative rotation. Hopefully, did you guys understand what I just said? What I just said was very important. I'll give it a second. I want to make sure you guys understand what I just said because it was really important. We've been going speculative tech, speculative tech, speculative tech. Every time we've been going speculative, we've been making a higher high. Well, guess what? We have not made a higher high in the last 4 days, and we switched off from speculative back to defensive. So that's negative, and now we're below the 8-day EMA. And by the way, volume is back to normal now. Remember how it was cooling off right here? It's fine now. So this is very, very important, and this is very, very defensive. Okay, so you guys understand now where we stand. There's a lot more. It's much more of a two-sided market than it was a week ago, 2 weeks ago, 3 weeks ago. Sentiment is not there. We're below the 8-day EMA. I want to make sure. Thank you, Eric. I want to make sure you guys understand what I'm talking about. Okay, are you guys ready to do some stocks? I'm going to do the short side. I'm doing the short side first, okay? It is cold here today. All right. I would write this down, guys. I'm going to be looking at these stocks. I'm working from home. Matt has his last doctor's appointment today. It's his last follow-up. So I'll be working solo today. I'm taking this with me right here, and I'm looking at these stocks as soon as the market opens. So right here, we have Guild, first bearish stock, second bearish stock. I'll look at Apple, Mark. Give me a minute. I'll look at Apple when I'm done with everything. That's a good idea. I'll look at Apple. Oh, this is a beauty right here to the downside. Look at that. Nice consolidation, breakdown. None of these fast, high volatile moves. This is a nice short. QDEL. Give me a minute, Mark. I'll look at Apple. Oh, yeah. I gave you guys this one last week in the trading pit. And anybody make money on this in the trading pit? Not cars, car. Car. You guys made money on this one? I gave it to you guys last week. If you guys made money on it, give me a shout out. Let me know. Yelp. Ooh, look at this. Right below the 200-day moving average. And look at this. It's nasty. Nasty, nasty, nasty. DBX, Dropbox. Bad earnings, may have some follow through. Be careful with these because after earnings, they have a lot of volatility. So you have a big bar. So you have to be extra careful. Okay. And last one, CHRW. Oh, this is beauty. See it gapped, consolidated. Looks like it's ready to go down again. So that's the shorts. All right. That's the shorts. Let me look at Apple real quick since I'm already on the short side. Be careful with Apple right here. Wait for Apple. what you want to do with Apple is you want to wait for Apple to break this level. Apple has a descending triangle right now. Look, see that? It's a descending triangle, and it could bottom out right here, or it could break. So I want to see it have a nice clean break here with volume. Okay? Nice clean break with volume. All right, let's continue. I'm about to do the long side, okay? You guys just saw the short side. I'm going to do the long side right now. All right. I talked about it last week, Adam. I'll talk about it a little more. Yeah, give me a minute. I'll get into it. Right here, GBTC, still like this one. Like this one right here. I like US Foods. Notice defensive. Defensive. Defensive stocks will not offend anyone this week, I promise. Look at this. This is a beauty right here. Jar. Talked about this one last week. Still looks pretty good. This one looks good if it can catch a bid. This is a beauty. I would probably say this is my favorite one. Maybe. I really like that one a lot. Sprouts. This one looks pretty good right here. Oh, this one looks a beauty right here. Make My Trip. Another really nice looking one. I've been talking about this one quite a while. Still doing good. Still looking fantastic. Got two more. This one and Zimview. Looks fantastic. All right. Somebody asked me to look at EWJ, the Japanese. I'm pretty bullish on Japan right now. Yeah, I still like Japan. I mean, look, it's very volatile and it's going to have a sting. But remember, I told you about it right here, and we're up here. I think it's got more upside, but it's going to have some volatility, Adam. GE, I'll look at GE, and that'll be it for today. Be careful with GE. I think GE is going to come down to. I want to buy GE, but I'm not going to buy GE. And this may be a top. It looks very toppy here. I want to see it break through this level in a nice way. If it doesn't do that, it's not gonna be good. Hey guys, we just broke our record. 223 people we just had. That's fantastic. I love it. All right, before I let you guys go, Jack Carter is unleashing a game changer this Wednesday, and it's not just a trading tool; it's a revolutionary timer and accumulation of his 30-year in this business. He's going to give you guys something very cool. I'm going to post a link right here. And oops, let me just say this here. This timer springs to life after spotting unusual signals across select stocks with astonishing 81% backtest accuracy. Square back in March, Roku and DraftKings in November, DocuSign in December. He nailed them, all of them. And right now, there's about $8.8 trillion gearing up to a flood market, and Jack is ready. His record speaks volume. The guy's a former market maker, and the world premiere is drawing close. Only 500 people are going to get access to this launch. If you're ready, remember it's happening at Wednesday at 1 p.m. Eastern time, right after my VIP room. I hope you guys have a absolutely fantastic day today, and I will see you guys later. Thank you for being here. If you want to email me, it's Roger. There you go. Bye, guys. Have a great day. I'm going to be sticking in my office all day long. If you have a question, let me know. Bye, guys. We'll see you soon. What about those of us who have to work during the course? I don't know what that means. Awesome. Not sure what you mean by that. Get on my Telegram channel. Here, look. Awesome. Join my Telegram. Go to rogerscott.com/Telegram. There you go. All right, guys. Bye. Have a great day.